Folks, sorry about the delay. I had a little bit of technical issues here with the video, and it's still not fixed, but good enough for government work. So let's get started. Don't mind the background here. I just started working on my office today, and it's a train wreck, so not a good day to decide to do that. Let's welcome people. Seymour Rivers, look forward to the next episode of Sunday Night Future Live, Bob. Thank you, sir. Mr. Pete, welcome. Franklin, welcome. Hope everyone's. This is why we are here. Take it away, Bob. Roger, thank you for the segue there, Franklin. All right, everyone. The futures are open, and I am late, so let's get to it. Futures are up nicely here. They were up higher. These are the E-minis, and this is kind of what we were hoping for, was a rebound in the futures market. Hopefully, this will carry through tomorrow. I really hope that we get 1 or 2 days worth of a rally here. And you'd be saying, wait a minute, you just did best stock charts. You just said you're short the market. We covered shorts on Friday. We covered our short of Netflix. We covered our short of the Qs using put options. We are still short of the Qs using SQQQ. We're looking to add more to that trade. I only want to do that on a rally. I want to re-enter the put side of the short Qs on a rally. I want to re-short Netflix on a rally. So that way, if we rally up into a resistance level, we know that there are good chances that we fade from that resistance level. But if we're wrong and we break out above it, well, we stop out very small loss and we live to play another day. Maybe we'll get long. We'll do something. There's always something to do. So E-minis are open. They're looking pretty good here. This is a 5-minute chart. Let's continue on with equities. The Russell 2000, they are up. Very similar to chart as to what we're seeing with the E-minis, up fractionally. We were higher, a bit of a fade. But this 5-minute pullback here, inside bar, I think that we move up higher. I think that we're looking at a potentially strong open tomorrow. Yeah. And that's good. That's good for us. We want to reload on shorts. The NQ, the NASDAQ 100, that's up spot 20%. It looks like we're going to go higher here. Let's throw up an alert. Let's get notified of when we start breaking out to new higher highs. If we break out to new higher highs, QQQ, higher. Okay. Let's take a look at the Dow. The Dow had a pretty good week last week. It is up as well, but again, like with the RUT, as with the E-minis, we're down. That inside bar, the last 5 minutes did not get a follow through to the upside. It actually pulled back. We're testing the 9-period moving average on the Dow. I think there's a very good chance that they shrug off this little pullback here and we move up higher. So I think it was the wise thing to do to book profits on shorts. And if we get this rally in the markets, we're going to be taking off a bunch of options positions. We have money out there that we made good money. We're at or around that 21-day period to expiration. We want to take that position, book our profits, reestablish further out in time, further out in strikes. So that way, if the market gives way, we have a safe distance between us and it so that we can maneuver. And we also want liquidity. We want to build our liquidity position. So just in case we wake up to really bad futures one day, we have the capital to take advantage of it. All right, moving on to, let's see if my dollar's up here. It is. Dollar, I'll tell you, The dollar weekly time frame closing out really strong on the week last week. The opening bar here, I haven't seen an opening bar looking this good on the dollar in several weeks. Usually it's just flat, doing nothing. It's the euro, it's the yen that are moving. Right now, the dollar, nice bullish reversal bar, 15-minute view. Let's go down to the 5-minute. And we are breaking out on a 5-minute view and a 15-minute view. Dollar appears like it's going to continue up higher. Now, that being a known, what's gold doing? No great shock. Gold is down. Dollar up. You want to avoid commodities, folks. When the dollar ultimately succumbs to the reality of its future, well, then you're going to want to own gold. You're going to want to own silver. You're going to want to own anything you drop on your foot. It hurts. You want to own it. And right now, gold is persona non grata. We don't want it. We want it at lower prices, 925 to, excuse me, 1925 to 1900. It looks very interesting. So we closed out at 1945 spot 70. And I think that we do break lower. Of course, if the dollar starts to fall apart, then we reevaluate. Taking a look at silver, silver is up. That's a nice little reversal bar here this evening. And this may get a continuation move up higher. Yep, there we go. They just bit it. Okay. Sticking with commodities, let's take a look at copper because silver's an industrial metal as well. So I'm curious as to how copper is doing. Are the industrial metals rallying here? And they are. Copper is up fractionally. It was up higher. It's now reversed a bit. Really nice opening bar here on the session. Let's see if they put in a higher low. Moving on to energy. Energy has been a bright spot, except light sweet crude at current is down nearly a half percentage point. 30-minute chart. Yeah, this is a lower high, and we're putting in lower lows. I think that we're heading down to $82 a barrel on crude. It's not a far cry away, but I think that's a good support level to watch. Heading on over to NASDAQ just made a new session high. Let's take a look at what that looks like. That's not what I wanted. That's not what I wanted. I'll get it right eventually. There you go, Bob. Good boy. Nice. Okay, so we have a continuation breakout here on the NASDAQ 100. I'm going to make the assumption that the Dow and the Russell are following suit. This is what we want to see. We want to see a rally up and into resistance levels, ideally on declining up volume sequentially on a daily chart, and then we look to lean in short. Good stuff. Now, we did open up a long position on Microsoft on Friday. We sold deep out of the money puts. We're up like 1% on it right now. We're looking for a rally on Microsoft, and then I'm going to sell twice as many calls deep out of the money as I did puts. Ratio strangles. They're working very, very well for us right now. Home heating oil breaking down. Good to see. Let's take a look at agriculture. Destroyed. Let's take a look at a weekly chart. Wow. This is wow. Let's take a look at a weekly chart. This is corn. Corn prices moving lower, a lot lower. Soybeans just off of support, but they appear as though they're going to move lower. Wheat breaking support. They tried to rally it, right? We broke down the week before last. Then last week, They did a retest of that breakdown point. Yet buyers saying, "Oh no, 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 you got it wrong. We're not going lower. We're not going lower. No, we're going to buy here," and they got destroyed. This is why you don't chase anything up higher, especially when it's in a downtrend. So wheat prices going lower. Now, I had a New York strip on Friday night. It was delish. Jonathan's Restaurant, Huntington, New York, outstanding. They have a rosemary set of rosemary French fries, French cut that go with it. Really, really nice. Great pairing, great sauces to go with the steak. So I got to check out the price of cattle because I paid a lot of money for that steak. It was good, but a lot of money. And cattle prices are still very strong and apparently want to go up higher. Bitcoin, one of my top picks for the new trading week, Bitcoin. Take a look at the stair step higher, right? You saw it here, breakout. You saw it here, breakout. Now you're getting it again here. Watch for a breakout on Bitcoin. It's probably going to be a big one. I have a price target of 60,000 on Bitcoin. So I think that that's where we're going. Not necessarily this month or this year, but I think that's where we're going. So Bitcoin looking really, really good here, despite the fact that it's down fractionally at current. So before we head on to the news events affecting the market, let's take a look at people joining in. Folks, if I could ask you to hit that like button, like, subscribe, you know the deal. Please, it helps me out with the YouTube algorithm. TF Hatter. Hey, Bob. Hey, y'all. Welcome. Falcon, where you been? Hey, Bob, can we look at Penn later on? Yeah, they just sold Barstool Sports back to Dave Portnoy for $1. Apparently, the federal regulators were all over them, or state regulators were all over them because they didn't like what Dave Portnoy stands for. Ridiculousness. I think it was incredibly oversold and attacked by retail shorts looking for reversal opportunity. Okay, we'll take a look at it. Gold seems to 1976 at 103 drop. Michael Oliver, he suggested a low accumulation of sellers. This price, okay. I would not be a buyer until the dollar breaks. No matter what support level you're at, that dollar has got to it's got to reverse before I get long of gold. Yields can move up higher. I don't care, but the dollar cannot move up higher for a sustained rally, except if you have a geopolitical event. Good afternoon, contrarian. Talon, I got your. That's your mom, huh? Yeah, right. And you asked the question. What was it? What was it? Here it is. You've always been able to see the Met crash coming. The only reason why I've been able to see that the crash is coming is because I've been through these before. I was there in 2000. I was there in 2007 and 2008. That one I knew was coming from a long while because it was obvious. You had mortgage contracts out there that you knew there were teaser rates. You knew that they were no doc mortgages. You knew that those mortgages were going to reset and people's payments were going to double on each mortgage that they had. And there was a lot of speculation in the market, people buying investment homes and whatnot. So that one was easy to predict and almost date specific. So that was the easier one to pick. In terms of this one, a little bit more difficult, but it's the same deal. Cheap money leads to asset inflation. And at some point in time, it's going to give way. The question is, what's the catalyst? This one here, I believe it to be the regional banks and commercial real estate. I could be wrong. Maybe it's going to be something else that we just don't see yet, like with COVID and 2020. So, the as Michael Burry said in The Big Short, bubbles have markers. You know them when you see them, and a lot of people say you don't know you're in a bubble. That's not true. You know that you're in a bubble. Silver just broke out to a new higher high. You know when you're in a bubble, you just don't know when it's going to break. So that bubble can keep inflating, but the catalyst, you just don't know what's going to prick that bubble. I think it was back in March it occurred with the regional banks, and they're just papering over it right now. The Federal Reserve is. All right, let's go to rest of the comments here. In the U.S., what time does the futures open? 6 p.m. Eastern Standard Time. NASDAQ, all the exchanges open up at that time. Seymour, Pete, Tom, Falcon, big shout out to the Stock Fox, Frank. Any view on RGTI, Tom? RGTI. We'll take a look at it. I have requests from Gay out there too. Paul, top of the evening to you. TF had any Asia-China drama going on? China's in a doom loop. They have a lot of problems there. They have more debt than we do. Their youth unemployment is at like all-time highs, and their net exports are dropping. Their imports are dropping. So what does that tell you? It means the consumer overseas and internally over in China, they're hunkering down. They're trying to weather the storm. Unfortunately, the storm is only going to get worse, and we're going to talk about yields in a moment. So at current, the futures market looking fairly strong. Let's just circle back for a moment to silver to see what that's doing. Sorry about that noise. Again, Bob. All right, so silver looking good. Very, very thin volume, obviously. Okay, so we have the NASDAQ at session highs, up nearly 1/3 of a percentage point. 10-year yield, folks, is rallying. I believe that this is a new weekly higher high. Let's validate that. Today, 14th, Friday. No, I don't think it is. Wednesday, Tuesday. It is actually. It's a new weekly higher high. So yields are moving up higher, putting into question the ability of the NASDAQ to hold this move up higher. But we are stepping higher. VIX looks like hell. NASDAQ now up 1/3 of a percentage point. So gaining steam here, gaining momentum. And there's more room to go to the upside here on the Qs, at least on a 5-minute chart. Let's talk about what we're looking at this coming trading week. Okay, so let's start off with a little bit of humor, as we always like to do. And this is at the expense of our deal friend, Jay Powell. Let's get to it.
For the general public, for those working families of people, why 2%? Why is getting it to 2% so important?
So that has become the globally agreed, essentially all major central banks target 2% inflation in one form or another.
How does that help my Nevada families? How does that help people in Nevada?
I'll tell you how it does. And it's I guess it's obviously not it's not obvious how that is, but 2% inflation, to have people believe that inflation is going to go back to 2% really anchors inflation there, because the evidence is and the modern belief is that people's expectations about inflation actually have an effect on inflation. If you expect inflation to go up 5%, then it will. If everyone kind of expects that, because that's what businesses and households will be expecting, and it'll kind of happen because they expect it. So
for the general public.
Okay, so he never got to where the rise in inflation is good for the public. He just doesn't. And it's in the Fed's charter that they're supposed to target 0% inflation. And this goes back to an update of their charter back in 1978 when inflation was running rampant. And it was their goal. The initial goal was to get inflation down to like 5 or 3%, something like that. And then the ultimate goal after achieving that was to get it down to 0. So they really don't have a mandate to say, okay, we're going to target 2%. Their mandate is to get it down to 0. They just make this stuff up as they go along, and nobody holds them accountable. So obviously he has no answer for her. Good question, but just goes to show you that we're being skippered. This ship is being skippered by a bunch of captains that are wasted. They have no clue. All right, so economic data coming out this coming week. Retail sales, folks. I can't emphasize how important retail sales is for the U.S. economy. It's a demand-based economy, a consumer-driven economy. If the retail sales number come out poor, that is going to hurt equities in a very, very big way. So watch it. You're going to have the Empire State Manufacturing Survey. They're expecting a negative number. You have the Chicago region report that came out last week. Not good. So Wednesday, we get housing starts and building permits. Building permits is a forward-looking indicator. So watch building permits. In particular, we're going to get FOMC minutes out on Wednesday as well. And on Thursday, we're going to get initial jobless claims. And the takeaway here is that initial jobless claims last week came in higher than what was expected. So they're expecting 238,000 applications this time around. So watch that number. If it beats to the upside, that's going to be a major problem. Don't forget, you had 30,000 new entrants into the unemployment rolls due to yellow freightways going out of business. Whether they're going to be reflected in this week's numbers, next week's numbers, not quite sure if they're going to stagger it or not. But obviously, this is going to be an influence for a while. Now, in terms of expectations for a Federal Reserve rate hike, let's do a refresh here because this changes. So the expectation is for September that there's not going to be a rate hike. And this has really not fluctuated all that much. It's been pretty steady since the last Fed meeting. Now, earnings coming out this coming week, we're trailing off here. I mean, not this week, but the following week, we're going to get NVIDIA. That's the next big, really important number, with the exception of a couple. Walmart. Cisco is not what it used to be. Rumble, that's going to be interesting. It's actually a pretty well-run company. But a lot of small names out there coming out this week. So earnings for the by and large are done, except for NVIDIA's. I believe FedEx is coming up and a couple of others, but that'll wrap up the remainder of the quarter. Now, moving on to interest rates. This is the 800-pound gorilla in the room. Interest rates on 30-year mortgage are now at their highest in 23 years. New home buyers now spend a record 40% of their income on a mortgage. It's supposed to be 20%. Meanwhile, the median sales price of a home in the U.S. is at 560% of median annual income. What's the long-term plan here? There is none. They're going to try to inflate away the debt, and that's going to kill the U.S. dollar. At some point in time, the currency markets are going to wake up to this. They're going to dump the dollar. They're asleep at the wheel. The bond market's beginning to get it, and we've been talking about this for a while now. The inverted yield curve is now steepening. So take a look at the 30-year Treasury. This goes back to 2000, and we're flirting with highs not seen since 2000. And real earnings are not growing relative to inflation. Housing affordability hits new 15-year low. I mean, we haven't been this bad since 2006. Horrible. And here is a major concern. We've gone over this, but more and more voices are beginning to express it. Small banks now hold a massive $1.9 trillion of commercial real estate loans, CRE, commercial real estate, obviously. This is up nearly $1 trillion since 2017, while large bank exposure stood flat. This is why the money center banks are doing good. Regional banks are suffering, besides the fact that the regional banks did a horrible job of risk management and staggering out their bonds, and they got whacked when yields went up. The worst part, over 1.5 trillion of CRE loans are due to be refinanced by 2025. That's not that far off. Higher rates, falling prices, and mass vacancies, all with record levels of exposure to the same banks that almost collapsed this year. We went over this on Thursday night. on our live stream that the efforts by banks to continue to tap the Federal Reserve for collateral to stay afloat, it's at record highs since March when this all began. What could possibly go wrong? So here's a chart. Money center banks flat, small banks getting ready for the pummeling. These banks are going to do really well relative to these banks. And in fact, I happen to like the banks here. If we do get a rally this week, I think that we need to be long of the banks, not the regionals. The regionals closed up on Friday, but the money center banks, in particular, I like FAS. That's a leveraged ETF. I went over it on best stock charts for the new trading week. It's posted on the website. It's posted on YouTube as well. And if you're not on our email list, if you want it in your inbox, just simply enter your email address anywhere below. We already went over this. All right, so debt, more debt. Everything's driven by debt. And we've talked about this again. This is just more notoriety. Now people are waking up, and they're really just parroting what we've been talking about. Interest paid on public debt saw an increase of 34% in the first 10 months of 2023. It is now getting close to surpassing defense spending. Where did that come from? I've been talking about that for a long time. That exact analogy. And I think that this number, this is a preliminary number. These numbers look low. I think that DOD defense budget is going up higher, thanks to the Republicans who gave them more than what they even asked for. And the public debt, interest on public debt, nearing the eclipsing the defense budget. So, at some point in time, the powers that be in Washington, they're going to be hammering on Jay Powell's door saying, hey, listen, you got to get these interest rates down. And you would have thought that with all the debt that they were printing and money near zero, that they would have taken, Treasury would have taken our debt and refinanced out long-term at near zero. They never even did that. They never did that. So the incompetence just remains astounding in Washington. And for the 10-year yield, this is a yearly chart, folks. So a lot of people are thinking that, this is a blip on the screen. The 10-year yield is going to pull back. Not a problem here. This is a yearly chart. The bear market in yields is in the rearview mirror. We are now in an established uptrend. The only thing that we have yet to do is break out above the highs of 2022. When we do that, we are going a lot higher, probably up to a 5 handle on the 10-year yield like that. What don't you want to be in? High beta tech stocks. You do not want to be in those names. And what did the 10-year yield do last week? No new weekly high, but a bullish key reversal bar. Not familiar with what that is? Top 5 favorite candlestick pattern. Link below, 5-part video tutorial. This is going up higher. Yields are going up higher. We see it in the pre-market already. For whatever reason, the NASDAQ's shrugging it off. They're going to probably paint the tape tomorrow. I would not go chasing the NASDAQ up higher. Yields are far too strong. The charts are very bullish. The NASDAQ will not like that. The two rallying together are uncompatible. Incompatible. What is the word? Incompatible, I think it is. So be careful. Be careful, be careful, be careful. The yield curve, monthly chart, you could see that last week we attempted a breakout out of this downtrend channel, but were rejected. The month is not over yet. So what this chart is telling us is that the bond market's waking up. They're saying, wait, whoa. The interest rate on long dated debt is way too low, and on short dated debt way too high. The long dated debt has got to come up in interest rate, and that's why you're seeing the steepening of the yield curve, but no breakout yet. But it's still, we have a couple of days left to go here in this month for this to happen. So be careful. Once this thing gets going in the wrong direction and momentum begins to build to the upside, that's when things get real fast in the equity market. Equity prices. We're pretty much unchanged from where we were this time last week. Not much has changed. Yeah, the markets were down last week. PE pulled in a little bit, but not much. We're still very expensive. We're going to talk more about valuations in a moment. But before we do that, let's take a look at the risk premium on the S&P 500 relative to the 10-year yield. There's almost no risk premium at all for the S&P 500 earnings yield versus 10-year Treasury yields. This is the third quarter in a row of negative earnings growth for the S&P 500. We've talked about this. The 10-year yield may rise further from here as economy and core inflation remain somewhat resilient. We saw that the other day with the CPI, and even more so on the PPI, which came out on Friday and caused equities to drop like a rock. Only 53% of S&P 500 stocks are still trading higher than their 50-day moving averages, which is down almost 90% from 3 weeks ago. This is a clear sign of collapsing momentum. No doubt about it. So, market breadth here in green. You don't need to focus on anything else. Market breadth is deteriorating. So the number of stocks that are moving higher when the markets are closing up are fewer and fewer. So we've talked about this. We've seen it on the bull bear sentiment, which we're going to go to in a moment. It's not really reflected there yet. It's still very, very extended and ripe for a monkey hammering very, very soon. Now, in terms of valuations, trailing PE, 40.9% above historic highs, 1960 to present. Trailing gap PE, 73.5%, going back to 1832. Forward consensus PE, now we're going to look at a forward-looking basis, 28.3% above historic measures. Trailing normalized PE, 23%. Forward PE multiple, am I right here? 77.2%. And you go on. I mean, there's only one metric here that is below the historic growth, and that's normalized ERP. I have to say, I don't know what ERP is. Earnings, I don't know what that is, to be honest with you. So I can't speak to it. Now, this is a great graph of NVIDIA and other stocks here, but on a relative basis, you got to avoid NVIDIA. If you're buying into this AI hype, you're going to get walloped. And NVIDIA got walloped last week again. NVIDIA closes 16% off sale. Stupid. All this way down to 39 times sales. Everyone's favorite stock, the beloved Cisco, reached 39 times in the year 2000. Very true. That got nuts. So here we are, NVIDIA relative to the rest of the market, or really, this is the rest of the market, Microsoft, Apple, Google, and Amazon. This is a parabolic blow off top. So, and he could have said that back here, to be honest with you, back in 21, but we have eclipsed that of recent dates. Why? Because AI, all of a sudden, it's everywhere, driving up NVIDIA. So in this light, where we have multiples that are very, very high, risk premium is very, very low, and the advances versus decliners are declining, you want to take a look at what is not really reacting that much. It did a little bit last week, and that is bulls, bears sentiment. And it pulled back slightly, but it's just shy of resistance. And at one point in time this month, we were well beyond this trend line, but ultimately the markets weakened up and we got to pull back on sentiment, but still very, very elevated. And when you take a look at the VIX last week, I should have had this up. Now, I talked about this with members on the week ahead commentary, and that's posted in the members area. And I did a long one this week, a very long one, because we're changing strategy. VIX weekly time frame. This is just absolutely abysmal, setting the stage for a rally going into the new trading week. Does it hold up? I don't know. I doubt it. But the VIX, a lot of apathy here. Clearly on the part of investors remaining very, very bullish. They're not getting it. They're not getting this train that is coming down the tracks. They're looking down a tunnel and they're seeing a little light. They're not aware of the fact that that's a train. and that light is going to grow ever bigger. And if they don't get off the tracks, they are going to get annihilated, and it's going to happen like that. When you go back to prior peaks, you get your markers, you get the double top, you get your breakdown, and then it starts slowly. You get a lot of volatility. One day you're up big, the next day you're down big, and all of a sudden you just break. And it's at that point in time where people go into shock. They go into shock because they can't believe that the market could drop so rapidly in such a short period of time. Clearly, this has got to be oversold, and we got to get a rally back here. And then it doesn't happen. They don't book the loss, or they don't book what profits they have. They don't raise liquidity, and then they get wiped out. I've been there before in 2000. I benefited from it in the subsequent crashes that we had in the financial crisis, COVID. We were prepared for it. So this time around, I'm warning again. This is my third time. I didn't do it in 2000. My third time now, third bubble. Get ready. I'm showing you all the reasons out there, and this is history repeating itself. This is not just a new thing where, he's making this up, that the yield curve steepens and equities roll over. I don't make that up. I'm not expecting that to happen because I just made it up. I'm expecting it to happen because that's what always happens. This indicator has predicted every single recession going back to 1955. Every time you get a steepening of an inverted yield curve, stocks crash. You saw it here in 2020. You saw it here in 2000, it was 2008. Back here, 2008, in gray is the S&P 500. You saw it back here in the dot-com crash. I don't make it up. Yield curve steepens. Here we are. Stocks go down. And you may be thinking, you know what, but Bob, wait a minute. The Federal Reserve is going to come out and they're going to bail us out again. You're right. They're going to do that. There's no doubt in my mind they're going to do that. But it takes several moves by the Federal Reserve for it to finally gain traction. I will take you back to the COVID sell-off, where the Federal Reserve just came out cutting day after day after day, and stocks would move up and then sell off. Stocks would move up and then sell off. And finally, the Federal Reserve knew they were out of gunpowder. They had to go over to Congress and say, listen, you guys got to start spending. You got to pump a lot of money into this economy, and they haven't stopped since. What time do we have? 6:44. Just really quick. And I thought this is kind of interesting. A weird little August week. Who keeps selling the NASDAQ into the close? I argue that that's not necessarily the truth. I would argue it this way. Who is not buying the NASDAQ into the close? All right, so it's not that we're seeing precipitous dumping of the NASDAQ into the close, because I went over the charts of the S&P 500 and the Qs on Friday, even before I read this. And I always watch the quality of the close of the last half hour, because that indicates what you may do the following day, because institutions position for the next day in that final hour of trade. So we watch it. So there was buying in the final half hour of trade, or the final 15 minutes of trade on these indexes. So I would rephrase this. I would say, who is not buying the market in the final hours of trade each day? Because that's what we've seen. Down day, rally back strong late in the day. We're not getting that anymore. By and large, we're getting distribution. We're getting a meltdown. Very little in terms of two-sided action. Friday was clear. A clear meltdown day, one-sided trade, and with a little bit of buying in the back half of the day, but not much. Since the start of August, we seem to get selling into close on stocks, led by the NASDAQ 100. No matter what news comes out, how the markets perform during the overnight session or in the morning, there seems to be selling pressure into the close. I don't buy that. I disagree. Right now is a classic example. Let's go back to the triple Qs. Okay, here's the NASDAQ 100, still holding up. It looks like it's going to break out higher. So bottoms are not made in a correction with the futures moving up higher in the market. You never see that. You just never see that. Bottoms are made by a washout. You open down ugly, and then on that day, you reverse and you close positive. Simple as that. It always happens. That's just the way it works. It's not difference this time. No difference this time. So I don't believe that we've seen the bottom here. I think they're going to paint the tape in the morning. They may bid it up higher because Friday was a pretty nasty day to the downside. Maybe they'll keep it higher on Monday, maybe Tuesday. And then we're going to start reaching resistance levels. And what we're going to do is this. I'll show you what we're going to do. And there's no need for a day trade here per se. No need to be sitting in front of your computer. Let's just bring up NASDAQ. $15-minute chart. And we're just going to do this. Okay, here's our downtrend channel. Now, would I be surprised to see them fade on Monday morning and gap this down? No, I would not. But I would expect support not too far below. But if we do get gapped up tomorrow, which appears to be the setup here, that we're going to rally up to that 1385 level on the NASDAQ composite, and then I'm going to look to lean to get short yet again of the NASDAQ. I just typed in yet. There we go. Let's do some comments here. What do we got here? Seymour, could negotiate steak dinner at 20% over spot. I'll try that the next time. Danny, hello. Kelly, welcome. What about the BRICS meeting next week or the week after? Also, is China's financial stability going to affect us? Kyle Bass wrote that China's in very bad shape. They are in very, very bad shape. China has really painted themselves into a corner. You have President Xi there in China, who's anybody that brings some news that he doesn't like is like persona non grata. So he doesn't have good advisors to help him with the economy. Also, the corruption is still very rampant over in China. There, as I mentioned earlier, the net exports are dropping, net imports are dropping. This is a global thing. The problem for China is that they're more in debt than we are. And their youth unemployment in a totalitarian system is very, very high. And the government is very, very afraid of those people that are unemployed. And the other thing is that they're embracing AI greater than we are. So the addition of AI is only going to mean more unemployment, unless, of course, they train these people for tech sector jobs, which they're probably doing a lot better than what we are doing here, because our education system is just abysmal. You know, how much better is theirs? You know, they put out propaganda. It looks pretty good, to be honest with you. But relative to ours, in reality, in real terms, what the outcome is, not quite sure. But my guess is better than what we're getting here for the dollar. Hey, Pat, welcome. TZ Burton, I'm a little behind on the stream. No worries, we were late today. Technical issues. What about Mara and Coin? You're bullish Bitcoin. Yes, I am. Coinbase, I worry about the government with them constantly. I know that they were given the rights to be the custodian on that BlackRock ETF. So that's a good thing. And BlackRock's not going to do that if they believe that the government was going to hammer Coinbase as hard as sufficient enough to hurt BlackRock's business. Well, the government wants them to stop trading all these other coins. You meaning the Chinese communists or our communists? You know, right now we have the establishment here is trying really, really hard to play catch up with the CCP over in China. So yeah, they're communists, but we're trying really hard to go down that road with the World Economic Forum and the Bill and Melinda Gates Foundation. They're trying really, really hard. Pat, PLTR, AAO, SoFi. Okay. Higher yields isn't good for stocks, though. No, it's not, because their borrowing costs go up higher. The smaller cap names, in particular, they rely upon borrowing to keep their businesses going. They got to roll over debt that they borrowed cheap. Now they have to roll it over and they have to pay higher yields. So yeah, that's going to hurt them. Utilities are a horrible, horrible investment when you're in a rising interest rate environment. It's not a good environment. Now the big bellwether stocks, they can always tap. They can do secondary offerings in the equity markets. They can do other things. They can issue debt themselves, but they're going to have to compete with treasuries, which are rising. So they're going to be impacted eventually. All stocks are ultimately going to get affected, but it's different levels of interest rate pain points that they have. Tech stocks are at the lower end of the spectrum because they have a lot of capital burn there. They got to go to the markets constantly for new capital, and they have to pay a higher yield on that. Whereas your big, your Nestle's, your Kraft Foods, these stocks they just print cash, so they're not as affected. They can withstand this. Plus, what they could do is they just raise prices. They're established. They're embedded into the system, so they're the ones calling the shots on inflation. And they can hold up longer than what can the tech stocks, and that's why we're shorting them. Take the money off the table. No doubt about it. Liquidity is king. Liquidity is king. 2%. So why can't the World Economic Forum destroy America? That's why I crush them. They have to, yeah. Yodi, his mind tricks won't work on me. Patrick, I've seen you in chat for a couple of years at least. I thought you would look like a young Irish guy from Southie. Oh, okay. You're talking to Patrick. Okay. Yeah. He does look like an Irish kid from Southie. He's just got a little bit of gray hair. If Powell was honest, he'd say the energy policies are crushing this country and causing massive inflation. Good point. And the spending's got to get cut. But nobody's talking about it. Democrats, Republicans, Uniparty, not talking about cuts. Who is buying our treasuries to sustain the printing and debt we have? Japan, primarily. China, the second biggest holder, but they're not the net buyers that they used to be. Ultimately, it's the rest of the world and the Federal Reserve. But at current, the Federal Reserve is a distributor of treasuries. Bidding getting downward pressure. I still like Bitcoin. I think it's going up higher. So Penn Catalyst was Disney bring Penn together. Yeah, they wanted that deal. Disney did not want Barstool. That was long story short. So Dave Portnoy made a killing and he bought it back for $1. The caveat to that deal is that if he sells Barstool Sports, Penn Gaming gets half the proceeds. Choice between totalitarian and technocracy world. And you know what? They're all the same. They're all the same to me. Totalitarian technocracy. That's just them not wanting to be called communists, but that's what they are. They're communists. It's very terrifying. And the CBDCs, which is getting some talk now, the central bank digital currencies, once that's implemented, it's checkmate. It's checkmate. And I think the only thing that's going to stop it is I've been thinking about this a lot. What would stop the central bank digital currencies? I think that to stop it, they've got to be issued first. And once they start blocking people's account, blocking people's ability to work and enjoy their life, I think you're going to get strikes. You're going to get massive, massive strikes. And people are just going to do work stoppages. If you're not going to pay me and I can't spend my money, why am I going to work? Because you're taking away the incentive that that built this country for having rugged individualism, now they're taking it and they're snuffing it out, and they think that it's going to be okay. Everything's going to be grand. This is the World Economic Forum, and they're delusional. They're absolutely delusional. And I think this is going to come home to roost over in China. The benefit that the Chinese have, the CCP has, is that the Chinese people, they really don't understand independence. They've always been under the government thumb. Sometimes it's worse, sometimes a little bit less, but they've never had that rugged individualism. You don't see innovation over in China. Innovation occurs here in the United States, and they steal it. That's what they do. That's the communist model. So if you stifle out innovation here in the United States, what's left? What's left? If I could post a pic, I would send a chart. Okay. The ES is next and a day or two behind the NASDAQ on moving averages. Okay. Dow Jones is the furthest away. Yes, it is. That's true. Jeffrey, hey, Bob. What's your take on REITs? Oh, REITs, I understand. I didn't look at them last week. I understand they had a good week on a relative basis. Oil, I'm bullish on. Natty gas, I'm bullish on. We have a position in nat gas long. We have a strangle, which is giving us it's a problem child trade. To be honest with you, nat gas moved too far too fast, and I didn't go far away on the strikes enough. So that's I'll own that. But we're going to close out that trade probably tomorrow and reestablish further out on strikes, going out maybe even 50 days or so. We're going to use the monthly contracts on nat gas moving forward because they have more strikes. You can get further away. I went with the weeklies. That was a mistake. So I'm not going to repeat that mistake, but we'll do well with it. In fact, we bought the common stock last week as well because I expected a spike up the next morning. I forget what day it was. So I bought the common stock into the close. And sure enough, the next morning, it spiked up like 7%. And thank God I had that hedge on because that muted the impact of that move against our call side strikes. When investors close below NASDAQ, I don't know why I just said that. When the NASDAQ, not investors, the NASDAQ closed below the 50-day on the daily, that's a red flag for institutional investors and an instant sell signal while regular people scratch their heads. Yeah, because they're expecting a rally. They're expecting the party to continue. People get conditioned. Sam Gunderson. It's only a matter of time. We're in the late stage of Rome before the fall. Unfortunately, that is true. Okay, let's go to some stock chart requests. In the members forum, we have Oxy and NFE. I got to do a refresh. Make sure I didn't miss anybody. Nope, we got them. NFE. My pen's running. Here we go. And Oxy 4K. Okay. Let's do it. Folks, we're using TrendSpider automated technical analysis. 35% discount code below. Take advantage. If you're not using this, you're missing an arrow in your quiver. So please take advantage of it. Pen. Monthly chart. Not loving it at all. Bearish reversal bar. Weekly view. You know, it's threatening to break down to a new lower low. We were down last week on pretty big volume. So to me, the path of least resistance is clear and defined. We're going lower. Now, if we don't move lower, and this actually turns out to be a higher high, I would be a buyer on a breakout and above this upper band of resistance. So I'm open to it. I can't believe this is trading at $23.52 a share. That's nuts. This was well over $100 not too long ago. I really want to take a moment. I want to go over the financials here quickly. I want to get a feel for how they're doing. EPS growth looks pretty good. Wow. EPS 220%. EPS estimated change current year 209%. Return on equity. It's a growth stock. You don't expect good ROE. Looks cheap. I don't know what this is on a historic basis, but it looks cheap as heck for this EPS growth. 3-year EPS growth 13%. So what it looks like is that growth is okay. Not gangbusters, but they're working the business very, very efficiently and they're grinding out profits. So it looks pretty good here at a very, very cheap price. So I like it on a fundamental basis. I don't like the consumer here. The consumer's retrenching, and that may be one of the reasons why you're seeing Penn under a lot of pressure. So let's go to a daily chart. Hammered. Hammered. I would avoid this right now. I would wait for the breakout weekly time frame. RGTI, Rigetti Computing. Nice little move up higher. A widening out. This is what you call a megaphone formation. I would be a buyer of the shares at 2 points. One on a close above $2.81. And we'll keep this active for a couple of weeks. The other time I would look to get in here is right down here. I like it. I think it's probably going to move up higher. Daily view. Nice day on Friday. It showed relative strength. So it got extended. And I always say this, you go above that 3D Bollinger Band. Actually, that's just a 2D, but I'm sure we went above the 3D as well. And we pulled back. So this doesn't end well. So don't go chasing these stocks. So I like it. The setup's not there yet, but you're getting close. MARA. Monthly view. Mara is looking interesting. So you have a TTM squeeze here on Mara setting up for a very, very big move. And what that is that you see the Bollinger Bands in red. They're now within the Keltner channels in green. So that right now you're seeing energy getting built up on Mara. And given the fact that we're putting in higher lows and poised to put in new higher highs, I think that the resolution to this energy buildup on Mara is going to be to the upside. I think it's going to break out. And you can see how it's beginning to stack moving averages. It's sitting on top of them. They're moving up, or they're flattening out. What moving averages? This is a 9-period quarterly moving average that we're looking at on a monthly chart. So this is pretty healthy stuff. Other moving averages are moving up. This is the 20 period here. That's a 9 period on. No, this is not right. I thought this was the 9 period. Yeah, that's right. This is the 20 period moving average on the Keltner channel. What period? This is the 9 period, I believe. EMA. Yeah. So you have your moving averages that are beginning to go the right direction. It's breaking out above them. It's consolidating. It's liking it on a monthly chart, weekly view. Weekly view looking good. We pulled back. We broke support. We held the 9 period EMA weekly time frame. Would I be a buyer here? Not ready yet. Daily view. Okay, so I didn't have my trend lines up here. Shame on me. Nothing happening on the weekly. Nothing happening on the monthly, but the daily, there is something happening here. So we're in a downtrend channel, and we tapped this lower band of support down here on August the 7th, rallied up to the upper band, pulled back. Now it appears as though we're trying to put in a higher low. So I just want to see if we break this, because I would be a buyer of Mara back down to the lower band of that daily downtrend channel. Okay, we're going to keep this active for a while. So Mara looking good. Would I be a buyer here? Not ready yet. Not ready yet, but very, very close. Coinbase. We're back down to an 80 handle here. Let's go to a weekly chart. We're at a volume shuffle. We're near a volume shuffle. I think this is going to hold at least short term. 79.43 is support on Coinbase. I would look for support at that mark. Daily view. We broke support on Thursday. Friday, continuation move lower. This is where we're going to next, folks. 79.71. This would be good for selling some premium. NASDAQ 15-minute chart has broken the support level. Doesn't mean it's done, but watch out. 10-year yield is still higher. VIX getting some bids, but not really moving. This is the NASDAQ reacting to the little bit of a stabilization on VIX. That's why we're getting that pullback. Let's take a look at Coinbase. Check out the premiums. There's no premium. So you're really going to want this stock. I would sell near the money put options just below, maybe even down here. Go down to 75 strike. And if you get it down there, you're probably going to get a rally soon thereafter. So I like Coinbase, but I would be a seller of puts, or I would try to start buying at around a 79 handle on the stock. PLTR. And before we leave Coinbase, there's a big question mark about this. It's in the government's crosshairs. You never want to be there. If you're going to get long of this name, I would use a call spread. I wouldn't buy the common shares. You could even write calls against a call spread. So that's the way I would play it. That's the purchase of an in the money put and the sale of a deep out of the money put. Excuse me, the purchase of an in the money put and the purchase of a deep out of the money put. Duh. And that's your call spread. That gets you long, but you know exactly what your max loss is. You buy these common shares. Well, your max loss is all the way down to 0. And if you're buying 100 shares, that's, $8,100. So be careful. Binance gone, FTX gone. All these a lot of these exchanges are no longer existent. So just be careful. PLTR, I know they did earnings last week, and they spiked, but they didn't hold it. Let's go to the weekly view. Oofa. Avoid. It's going lower. Big volume last week. It's under distribution. I wouldn't buy this. They may rally it up to $16 a share, but that's whistling past the graveyard. I think they're going to rally it up, and then they're going to fade it. So I would probably look to lean in short at $16 a share. AAL. The airlines were doing good. No longer. Bearish reversal bar last week. One of our top 5 favorite candlestick patterns. Link below. 5-part video tutorial. It's probably going to go lower. They tried to rally it last week. It was a rejection. So what is the market selling you here? What they're telling you is that there are sellers right up there. There used to be buyers there. Now there are sellers. These guys up here, they want their money back. As soon as they get into that range of seeing this turn from a red entry on the trading platforms to a green entry, it goes to 0. They sell. They get rid of it. So American Airlines is breaking down. I'm not a buyer here. In fact, this is a probable short. We broke on Thursday, attempted recapture on Friday. This is what I'm talking about with PLTR, what they're going to probably try to do. And then they're going to sell it off. They're going to sell American Airlines off as well. So I would avoid this stock. If anything, I'd look to short it. SoFi. It's broken trend. It was overbought. I'm not a buyer here. We closed at the 9-period EMA. Maybe that'll hold. I don't think it will. We broke down on Thursday. A weak feeble comeback on Friday. I think we go down lower here. Maybe they'll rally it tomorrow with the rest of the market, but ultimately I think that it fades. It all fades. NFE. New Forest Energy. My new Forest Gump. Nice consolidation here. Very, very nice consolidation. Long base, a multi-month base. The longer the consolidation, the greater the validation of any breakout. They tried to break it out last week. It was rejected. I'm a buyer of these shares. On a close above $29 a share. Daily view. Looking good. It's consolidating. Right? It got extended. It's pulled back. It's doing what it's supposed to do. And clearly the trend lines are exactly doing what they're supposed to do. Click of a button. There you go. 35% discount code below, folks. Big time saver. Last one up, Oxy for Gay. Oxy this is a daily chart. I shouldn't be talking about the daily chart first, but looks good. Weekly view first off. Let's get log off. So these dotted lines here are quarterly resistance on top of a weekly chart. So this is multi-time frame analysis, and we broke out last week. Now, what I like to see this week is a retest of that breakout point. And I would be a buyer. I think that Oxy is going up higher. I know I misspelled that, but that's okay. Daily view. Daily view. We're extended on a third. This is the 2 standard deviation Bollinger Band. I changed this to get the TTM squeeze in. It's going up higher, but we're a little bit extended here. So just beware if you're initiating a new trade. So that is it, folks. Have a great night. Kelly has the last one here. Last one for Kelly. IONQ. IONQ. It broke down last week. I'd be a buyer down here at around 1491. That's where I'd be looking at this one. Not right now. Big volume last week, clear distribution. It got ahead of itself. Sellers moved in on profit taking. The trend is still up. There's nothing wrong with it. But I just think that you're going to get it at a better price as the selling continues. Obviously, some buyers moved in and they bid it off the lows of the week last week. But I like that that 1571 mark daily view. Yeah, they broke it down. They spiked it on Friday and sellers moved in. I would wait for a further pullback here on I said 1571. It closed at 1571. 1503. Sorry. My bad. Support. That's it, folks. You're very welcome, Kelly. You put that New York strip in my en route to Longhorn Steakhouse immediately. Enjoy it, Larry. Enjoy it. Also, quantum computing had a drop to 13 and up next day and then back down. They had a lot of volatility. TZ Burton, you are very welcome. Jeffrey, you are very welcome. And Kelly, of course, I'm glad you got a laugh out of it. You are very welcome as well. Hey, folks, click like, subscribe, get that 5-part video tutorial, and click the notification bell. Join us when we go live every Thursday and Sunday night. Have a profitable trading week. I'll talk to you soon. Be well.